the banking industry, being a key driver of what happens in the capital markets, has really seen this challenging time, resulting in the market cap coming down substantially and therefore affecting other counters, and therefore pointing to that fact that it's not necessarily the effect being restricted to the banking industry, but to the wider market and then the wider economy. Now, if you look at the evolution of the two key indices in the Nairobi Stock Exchange, that's the 21 share index and the all share index, it also shows the same pattern. You're seeing around this period of the low came into effect, the index coming down drastically. And this again tells you that whatever happens in the banking industry tends to mirror itself in what's happening in the capital markets. And that's really a very powerful message that if the capital markets are dragged down by what's happening in the banking industry, then that tends to tell you the view that the investors have taken on the wider economy.
While we recognize the government's emphasis on passing the act, which was to protect bank customers and allow consumers to have greater access to finance, it is critical to note that unintended consequences have been observed. The credit growth has slowed, adversely impacting on the average Kenyans, the banking industry, and the broader economy. It's therefore imperative that for all the stakeholders to re-engage to reach a win-win scenario that delivers lower interest rates. The banking industry shares the government's goal to make affordable finance more accessible, but the act in its current form is not fit for purpose to deliver that goal. KBA member banks remain committed to make banking better and rebuild trust in the sector. The banking industry is not just relying on the act to make affordable finance more accessible. We are also making the sector more sustainable with systemic change, such as using technology to enhance efficiency and reduce costs to customers, improving customer support and service standards, and educating customers to make sound financial choices. It's worth pointing out that most customers are not borrowing or saving more because of the act. There has been limited change in the banking culture as anticipated by Parliament. However, bank customers have witnessed better banking experience in terms of improved customer service. The report also noted customers want banks to support them to achieve their financial goals, mainly starting or running a business, home ownership, setting up an education fund, and completing payments of obligations. Therefore, policy interventions must be geared towards addressing these financing goals. Market capitalization dropped from 2.1 trillion shillings in August 2016 to 1.8 trillion shillings as of March 20th, 2017. While the bank's market cap dropped by 10.3% to 520 billion in the same period. All the key indices have taken a downward trend, sharply reducing from the time of capping in September 2016. All these adverse impacts of the Banking Act are indications that Kenya's financial system is bank-led, and therefore any adverse effect on the banking industry has a wider effect not only on the entire sector, but on the whole economy of the country.